I'm 680 News Senior Business Editor Mike Epple. The country's biggest bank, the Royal Bank, kicked off the third quarter earnings season today with big profitability in the third quarter. Yet all the numbers were below analyst estimates, and the share price didn't do much in reaction on the TSX, despite the fact that the Royal Bank made $3.3 billion in profit in its latest quarter. It's up 5% year over year. The company is raising its dividend payment to shareholders by 3%, and the company's CEO, Dave McKay, also talking about the possibilities of buying back some stock in the not-too-distant future. Investors, however, are concerned about the RBC's international operations, and this has held many of the big Canadian bank shares on Bay Street under pressure for much of this year so far, and the low interest rate environment and not as much rate of return in the bond market. Still, the RBC's Canadian operations saw profitability increase of upwards of 8%. Almost a year after it sold the somewhat controversial Trans Mountain Pipeline, and Kinder Morgan Canada itself today was sold to Pembina Pipelines of Calgary. Kinder Morgan selling for $4.3 billion. This deal also includes a Cochin pipeline, which is a trans-border pipeline that Kinder Morgan operates, and Pembina picking all these assets up at a 38% premium on Kinder Morgan's stock price. 4 years later, it turns out that Target's exit from Canada was the right strategy. We're looking today at a record high for Target's share price. It was up by 18% in Wall Street trade as the company hit the bullseye with its latest earnings update, weathering the concerns about slowing consumer spending. It has not shown up in Target's numbers, and they've seen a big focus on e-commerce, which is helping boost the bottom line. Lowe's had anything but a lower share price today. Home improvement retailer saw its stock price jump 11% on very strong earnings from the second biggest home improvement retailer. Again, another positive signal, specifically on U.S. consumer spending. And Ottawa-based e-commerce company Shopify saw its share price top $500 on the TSX today. Got a positive write-up in the latest edition of Barron's magazine about the prospects for e-commerce software and sales growth for Shopify, which has seen its stock price jump more than 160% this year. Best performer on the TSX. Company now worth $57 billion, top 10 in size in all of Canadian businesses listed on the market. From the 680 Newsroom, I'm Mike Epple for City News.